A very good morning, friends. I welcome you all to this seventh session of Quality Cafe. I also welcome our eminent speakers for today. We are having CA Atul Kumar Gupta ji, the past president, who would be joining us shortly. CA Rakesh Rathi ji, CA Vinay KSG, and we also have with us CA Shraddha Kivasara ji, who would moderate today's session. The topic that has been chosen for discussion and deliberation today is the internal control over financial reporting, which I've seen different short forms being used as ICFR or ECOFAR for this. Friends, this ECOFAR is a process, consisting of policies and control procedures to assess financial statements, the risk about it, and also provide reasonable assurance that the company prepares reliable financial statements. Detailed, fair, and accurate financial records with receipts for transactions are maintained and approved by the management for corporate governance. Through the effectiveness of ICFR, companies they can reduce the risk of material misstatement, improve the financial statement quality, including disclosures, and also attain adequate data security. In the session today, we would cover overview, requirements, planning, performing, and reporting in the audit during the session by the speakers. First by the speakers, followed by a panel discussion on the subject. So once again, I welcome all of you, all the participants and our panelists and speakers and the moderator to this session. I would take this opportunity to introduce our speakers and the panelists today. So, in absentia, Sri Atul Kumar Gupta ji, who is Honorable Past President of our institute and also is serving on the board of IFAC since November 2020. He has served the accountancy profession for more than 2 decades and is widely respected for his strong organization skills and deep insight in the affairs of the profession. He has vast experience in SMP practice, specializing in management consultancy, taxation, especially the GST, ITES, and audit. We have with us CA Vinay KS, who is a partner assurance at ASA and Associates LLP. He comes with over 18 years of experience in auditing and accounting consultancy services. He specializes in corporate audit services, risk assessment, statutory, and internal audit. He is also part of the ESG consulting team and advises clients on ESG risks, particularly on the social and governance part of it. CA Rakesh Rathi ji is a chartered accountant with over 3 decades of experience spanning across leadership and P&L management. His experience and exposure predominantly have been in the areas of accounting, auditing, and tax services. Currently, he acts as a regional expertise leader for assurance services and acts as a client service leader for various large corporate groups and clients. CA Shraddha Kivasara ji, moderator for today's session, is a chartered accountant and company secretary with over 13 years of rich experience in conducting statutory audits of manufacturing and IT companies. She has managed audits of large listed group companies and is an effective leader with excellent motivation skills to sustain growth momentum while motivating peak individual performances. So, friends, I would say we have a power-packed panel today, and now I'll hand over the session to the moderator Shraddha ji, to take it forward from here. Thank you, and I wish you all a very, very happy and fruitful learning. Thank you.
Yeah. Thank you, Vishal sir, for the warm welcome and a brief introduction of the eminent panel which we have today. So, dear friends, as we all are aware, ICOFAR is a very, very important topic. So, when we talk about the audit of financial statement of companies, reporting on internal controls over financial statements is something which is very, very critical and important for an auditor to perform procedures on while reporting on it. So considering the importance of the topic, considering the awareness which we need to create from a overall procedures we should perform, we today have a very eminent panel where we would have discussion around various aspects of internal controls over financial reporting. So just to start or to give a brief background, there's a lot of discussion on different aspects of internal control over financial reporting. So there's a very renowned global framework which is called as COSO component or COSO framework, which has different, I would say, different components to it. So before we start having a discussion with the panel, I would like each of the panelists, or before we have the question answer discussions, I would like panel to throw some light around the control environment, control risk assessment, how it is relevant from an ICOFAR audit perspective, and what are the considerations which they believe an auditor should keep in mind while performing the ICOFAR related procedures. So I would like to start with our panelist, Vinay. So Vinay, can you throw some light around importance of ICOFAR from an audit perspective, and how what is control environment, what is risk assessment, how it plays an important role, and what should be the important consideration which an auditor should keep in mind while performing the audit procedures for internal control?
Sure. Thank you, Shraddha. And thank you, introduction. I'm definitely quite junior as compared to the other two panelists. They are the eminent panelists. Don't want to set too high expectations, but I'll do my best for sure. Yeah. So moving on to the control environment, I think this is definitely the foundation for any internal control framework. And this is the pillar which actually provides the discipline and the structure to the entire internal control framework. So I think as auditors, as well as from the industry standpoint, I think this is something that each one of us has to look at it as something that is basic, something that is fundamental. And this is something which is going to be the base for all the other aspects of the internal control framework. Having said that, there are a lot of things that encompasses the control environment. One of the most important thing that I would say is the integrity and the ethical values. So the effectiveness of the internal controls will only reflect the integrity and the ethical values of the people who actually create it, administer it, and monitor them. So it is basically like the tone at the top. If we have a solid, let's say, a company with a very solid ethical values, policies, and they walk the talk, and that is the kind of foundation that we should ideally be looking at. So that is something that is basic. So integrity and ethical values are something that is like one of the most important aspects of the control environment. Besides that, we also have the management's philosophy and the operating style. So we see a lot of companies with fancy vision and mission statements. They also have their own operating style as well. It can vary from company to company, industry to industry. Some of them are conservative, some of them are aggressive. So all of this, the management's policy, the mindset of the management, the operating style of the management is also something that is very important. And for example, a company may have let's say, aggressive policy, accounting policy when it comes to, let's say, the revenue recognition. These are certain aspects which needs to be taken care. I mean, this is also one of the most important aspect. And the operating style of the management is something that, as auditors, when we look at a company's control environment, this is something that we need to look at. What is the philosophy of management? What is it that they aspire to do? What is the style of the working? And so on. And the next big thing I would say is the organization structure. If an organization has a clear-cut structure, clear areas of authority, key areas of authority, and the lines of reporting, then I think that's a very good organization. And that shows that the organization is very serious about the business that it's doing. Especially, let's say, we have a company where we have very clear lines of reporting. It is not that multiple people are reporting to the same person and same person is handling too many aspects of the business and so on. So these are certain things which give clarity to the organization as well as the auditor, and which also gives a comfort that, yes, this is a company with a solid control environment. Moving on to the next point, I would say assignment of the authority and responsibilities, again, similar to the previous point, how well a company assigns or gives authority and responsibility to its competent resources, assigning the right person to the right job. For example, I mean, most of us in our practical experiences would have observed that in some companies, let's say, there's a person who has been with the company or who's experienced, but may not be technically competent. I mean, he may not have the qualified, the valid degree or so on. he may be the one who is heading that vertical. Whereas there could be another person who is actually technically qualified, competent, but he may be reporting. So it all depends on what is the mindset and what is the intention of the management. So the assignment of authority and the responsibility is something which is very important and a key aspect as well. One of the other aspects is on HR policies and practices. This, I feel, clearly demarcates a company with strong values and strong processes in place. So HR policy also reflects the control consciousness of the entity, I would say, the standards of recruitment, the kind of experienced and qualified individuals that they hire, the background verification, emphasis on integrity is something that is very important, ethical behavior, periodical appraisals. These are some of the very key aspects of the HR policies and practices. And lastly, I would say, I mean, as an auditor, what we need to do is something that we need to assess, first of all, whether the management's philosophy and the style of working, which I mentioned, is in line with what they preach. So how serious is the management about the controls, and what is their involvement in ensuring that the controls are designed, implemented, and monitored effectively? This is something that is definitely that as an auditor one should do. And the last one is, again, if they have a solid, independent, and an active board or an audit committee that understands and exercises the oversight responsibility. So ideally, as an auditor, I think we should definitely look at how active the audit committee is, how actively they participate in the meetings, and what kind of questions they ask. And also go through the minutes of those meetings and how involved are they, or how concerned are they about the internal control systems of the company, and so on. And adding on to the control element, I think one of the other key aspect is the entity level controls as well. So again, entity level controls are something that operates throughout the organization, and it mitigates risk at the entity level. So that is something that is very important. It is like the topmost thing. If you look at the top-down approach, this is something that is very important. And this also gives an assurance that the organization's objectives are actually met. So entity controls, to name a few, maybe I think we can talk of entity controls which are related to the control environment, and entity controls that over management override the company's risk assessment process, controls that monitor the results of the operations or controls, and also the year-end financial reporting controls, and so on. Also the policies that address the significant business control and risk management practices. If I may give some illustrations, let's say a company has a clear-cut role and responsibilities for the directors. They have SOPs for all the key and crucial policies. They have a board review of the annual budget, the business plan, the periodic performances, the internal audit reports, and so on. A very clear BCP, a business continuity plan, or a disaster recovery plan process, periodic reviews of the departments. And the other thing would be independent review and updates on specific matters by subject matter experts, and so on. So these are some of the key aspects of the ELC, which I think would be which I can think of. I would request Mr. Rakesh or Mr. Atul to pitch in and add more points.
Yeah, thanks. Shraddha, can't hear you. You are on mute, Shraddha.
Yeah, thank you for your insights, Vinay. Rakesh, you can add in, and then you can also touch upon information communication and control activity related aspects about the COSO framework, so to say.
So I think, do you want to take that session? So I think Vinay has given an overall overview, right?
Yeah.
So you were asking for an overview, and then we'll come to the specific sections of the COSO, right?
Yes.
Right now, you just want an overview as to what's the environment related to controls and how do we look at, right?
Yes.
Okay. So see, I think this is I would say the internal controls or internal control environment for the purpose of financial reporting and otherwise also, which is much larger.
So I'll cover both the things. I say the internal control environment is the single most critical and the key factor for any company, because so right, starting from the tone at the top. So what's the tone at the top? That's something which drives the organization's environment and thought process and culture and the ideology. So if the tone at the top is not, which is very much up there in terms of governance, very serious about transparency, disclosures and everything, so then the people down below would not get those messages. So I think the most key important part of it would be the tone at the top, how the senior management, the board conducts itself, and how seriously they take ethics, integrity, transparency, clear communications, all of those things. So control, I would say, in if I were to just say in general terms, it is the single most key factor, which is very, very important. And most of the failures that happen is because of the control failures. Because if you have all the controls functioning, there are roles and responsibilities assigned to people. If everybody plays their roles according to the responsibilities assigned, I think uh, things will not go out of hand. So that's something which is very, very important. While Vinay has touched upon a lot many things, so I'll not like to repeat, but that's something very clearly. And now, with 2013 Companies Act, the definition of internal controls have been, widened to a great extent. Whilst we are supposed to report on financial controls, but the board is supposed to look at all operating controls overall. So the management has to ensure that there are operating controls other than financial control reporting also, that they are very properly defined, and there are risks which are addressed, and there is a testing of all of those. So just to be brief here and just summarize, I think according to me, this is the key.
Yeah, okay. Rakesh, any thoughts on the information communication aspect and the control
So
activity?
that as I said, Shraddha, I have a presentation also. I can overall
Yeah, you
touch
can
upon
give
ICOFAR.
that. Yeah,
Sorry.
you can give an over. Yes, you can give an overall presentation on those two aspects.
Yeah.
As yeah, you can continue with that.
So should I continue with that?
Yeah, yeah, yeah.
Okay. So let
Sure.
me just share that. Let me know if you can see it.
Yes, it's visible, Rakesh.
Okay. Okay. So I'll briefly take. So I think how what's the time that I can take?
You can spend 15 minutes. Yeah,
Yeah,
yeah.
I will do that.
You can spend 10 to 15 minutes, Rakesh, explaining us.
Okay. 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 So let me just begin as to where did it arise and what are the requirements. So let me first touch upon the requirements very briefly. So there are various places wherein this is mentioned about requirements. There is requirements under the Companies Act 2013. So there is Section 134, which specifies the responsibilities and what the directors are supposed to do. Then there is Schedule 4, then Section 143, then also Section 177, which touches upon this. The duties of the audit committee includes evaluation of IFC and risk management systems. And there is also a mention in the rules, right? The rules requires the board report for all the companies to state the details in respect of inadequacy of internal financial controls with reference. So I'll not go upon in detail. Everybody would be very much aware of the requirements. Let me first come to wherein briefly Vinay also touched upon. So what is the assessment of existing internal financial control means? So there are two types of controls and assessment that we need to do. One is entity level assessment and one is process level assessment. So for entity level assessments, we need to identify what are the entity level controls, what is the ITGC and EUC design assessment. Then we have to review the process documentations, do the walkthroughs and evidence analysis and conclusions. And similarly for process level assessments also, I think the ITGC and EUC design assessment has to be done. We have to identify the process level control, do the walkthroughs, review the documentation, and then document our evidence. Now, coming to the frameworks, Shraddha, you also touched upon that the widely used is COSO, but there are the most widely used framework is COSO framework. There are other frameworks also, like guidance on assessing control published by the Canadian Institute of Chartered Accountants, which is called COCO. Then there is also a guidance for directors on the combined code published by the Institute of Chartered Accountants of England and Wales, which is also known as Turnbull report. But I think the most widely accepted and used is the COSO framework. What does the COSO framework mean? Right. So COSO defines internal controls is a process effected by an entity's board of directors, management, and other personnel, designed to provide reasonable assurance regarding the achievement of objectives relating to operations, reporting, and compliance. So what does it mean? So there are 5 components of COSO framework. Control environment. So we may it will be good for people to remember if I can just coin a word, crime. So what the 5 elements are: CRIME. One is control activities. R stands for risk assessment. I for information system and communication. M for monitoring, and E for the environment. And all of these 5 components have to be operate effective in the operations, in the reporting, and in compliance. But what we as auditors are more concerned about is with respect to the reporting and compliance. Further, if I may further elaborate on this, because this is very important, this is the basic principle on which most of the companies operate and have their control environment. So there, as I said, these are the 5 components. Then these 5 components have 17 principles assigned to these each, which I'll talk more in my further slides. Then these 17 principles have 72 sub-principles. So all of these components have their own principles which are defined and what is supposed to be expected out of those. What we also need to do, I think, what we are supposed to do is do the control testing, and then the control testing. Okay, before that, let me take a step back. So, what kind of controls could be there? So, there are 2 types of controls. One is preventive control, and the other is detective control. So, even sometimes, the mere presence of a detective control. So, for example, there is a CCTV camera installed over the cashier. Now, that's a detective control. But the mere presence of a detective control can also prevent anything going wrong. So then coming to control testing, there are 2 steps to it. One is design and implementation testing, which is called DNI, and then there is operative effectiveness. So so say for example, carrying on with that example which I just said, maybe a camera is installed on the cashier. Now, if I were to do the testing, what I would do is that I will check the design. Say, for example, if the camera is facing the ceiling, the design and implementation is not appropriate. So then I don't go for operating effectiveness testing. I just if the design fails, then there is no need for testing of the operating effectiveness. But say, for example, design and implementation is fine if the camera is facing the cashier, and that's fine and it's working. But when I go and do a testing, out of, say, for example, 25 days I test, on 10 days it didn't function, maybe for various reasons, electricity was not there, so that operative effectiveness fails. So I'll just stop here. Maybe we'll take on these things. So that's on overall the control framework. I talked about 5 components of COSO framework. I also talked about how they should be working within the operations, reporting, and compliance frameworks. Then also about the kinds of entity level assessments and process level assessments, preventive and detective controls, DNI testing, and operating effectiveness testing. I talked about 17 principles. So the control environment and risk assessment, I think broadly Vinay had touched upon, and maybe he will take that further in more detail. What Shraddha, you asked me about, talking about control activities and information and communication. So I'll focus my conversations more on these two components. So if you see here, there are three principles, assigned to control activities and information and communications. So in control activities, you have select and develop internal control activities, selects and develops general control over technology, deploys through policies and procedures. I'll talk about these in further slides. Now, talking about these essential components to be addressed by the relevant framework selected, what it should address. So the component is control activities. Right? So these are the five we discussed. So what it should address? It should address the policies and procedures are in place that help ensure that actions identified to manage risk are executed in a timely manner. Because see, control environment is always ever evolving process. It's not something that you have created a risk register, you have assigned controls, and you are done with it. You can stay with it for years to come together. No, it is every day evolving process, and I'll touch upon that also further. Information and communication, what it should address is the process that ensures relevant information is identified and communicated in a timely manner, and both internal communications and external communications. Now, talking more in detail about the control activities principles. So the first principle that we have is the organization selects and develops control activities that contribute to the mitigation of risks to the achievement of objectives to the accepted levels. Now, what should be the points of focus? Right. So the points of focus out here is integrates with risk assessment, considers entity specific factors, determines relevant business processes, evaluates a mix of control activity types, consider at what level activities are applied, and addresses segregation of duties. Let me just touch upon one of it. Say, for example, addresses segregation of duties. So there has to be a maker checker. Say, for example, a cashier does, and we continuing with the same example. Suppose if the CCTV camera control was not functioning, but if there is a supervisor who checks the cash every day at the closure of the day, that could be a mitigating control out there. Coming to the second principle, the organization selects and develops general control activities over technology to support the achievement of objectives. Here also these are the points of focus. What should be your point of focus is determines dependency between the use of technology in business processes and technology general controls, establishes relevant technology infrastructure control activities, establishes relevant security management process controls, and establishes relevant technology acquisition, development, and maintenance of process controls. So to talk more about these, there have to be application controls and automated controls, and both of these have to be tested for their design and implementation, and also for their operating effectiveness. Say, for example, if I were to give you some examples of application controls, checking mathematical accuracy of records, maintaining and reviewing account trial balances. If I were to give you some examples of, say, automated controls, whether the program change controls are in effect, whether the control that restricts access to program is there or not there. Policies, whether the policies are in action. So as I said, that it is a continuously evolving process. Say, for example, if a new regulation has come in which creates a new risk, then again you have to come up with another control out there. So the organization deploys control activities through policies and establish. I just covered that. So what I was saying is that it is a continuously evolving process. The management and those charged with governance have to continuously see as to whether the control environment is effective and responds to the business and the external environment. Coming to the information and communication. So the organization obtains or generates and use relevant quality information to support the functioning of other components of internal control. This is the principle. So there are three principles under this component, and these are points of focus. So maintain quality throughout processing, considers cost and benefits, captures internal and external source of data. What we need to check out here is the input, the processing, and the output. So the input data has to be which is clean, which is meant to be what is required to be inputted, because if the input is not appropriate, the processing and output is not going to address, and that is also going to be something which is not appropriate. Simply the processing has to serve the objectives of that processing. For example, if I were to take an example of data's aging. Now, if I were to take an example wherein data's aging analysis is to be done, if the person who's designing the report, he, instead of considering 30 days aging, he considers 45 days aging. So then that report would not serve the purpose. So it's important that the input data or the source data is also very clear. The organization internally communicates information, including objectives and responsibilities of internal control necessary to support the functioning of other components of internal control. Here, so the internal control information, communications with the board of directors. How is the communication with the board of directors? Provide separate communication lines. So there has to be internal separate communication lines. For example, you have ethics helpline. Selects relevant methods of communication. So there are various methods of internal communications. You have your policies, you have your manuals in the organization, you have trainings. So you conduct trainings for various policies. Those are internal communications. External communications, the way organization communicates externally. So the results you publish is an external communication. The investor presentations, your website, your the AGMs or the meetings that you conduct. All of those are external communications. Then the inbound communications. For example, you have open channels for complaints and whatever allegations, if they are there, you deal with them appropriately. So all of those are also part of these communications. Then coming to the principle, the organization communicates with external parties regarding matters affecting the functioning of other components of internal control. So I think I touched upon this. So the point I was trying to make is that both inbound and outbound communications have to be facilitated, and there have to be open.
Rakesh, I think we lost you.
How do you audit these control activities? So for control activities, the auditor shall assess. Are you able to hear me?
I think yeah.
Okay. So inputs, procedures performed, and outputs of the significant processes the entity undertakes. The extent of information technology involvement in the period and financial reporting process. How extensively you use IT, whether everything, all financial reporting is automated, or you use a lot of Excels. So all your procedures would then change. Who participates from the management? So how is the participation, whether the CFO, the financial controller, the managing director, how is it happening? The locations involved in the period and financial reporting, if it's a decentralized structure or whether it is a centralized structure, all of that will depend on how do you test your or maybe audit the control activities. The types of adjusting and consolidating entries. The nature and extent of the oversight of the process by management, those charged with governance and the audit committee or equivalent. Design and operative effectiveness of controls undertaking by the management to safeguard its assets. So all of these things have to be considered when you do audits of the control activities. I think what is most important is when you do audit of any entity, I think it is first and foremost, I think the best and as which I have been practicing is have extensive conversations with all the key stakeholders to understand how the organization is structured, how the organization functions, how is the line function, how is the structural function. So once you understand every nuances, I'll just give you an example. If you were to audit, say for example, two NBFCs, both are NBFCs, but the audit procedures would be very, very different because even the environment in which they function. Say for example, if one is a microfinance company and the other is housing finance, so your procedures would completely be different. One has central and credit underwriting, one has decentralized credit underwriting. So these are the examples. So once I think it's very important for us to understand the organization and how it functions, how it operates, how it runs its business, and accordingly we have to tailor our audit procedures. Further, the auditor shall obtain an understanding of the information systems, including the related business processes relevant to the financial reporting, including the following areas. So the class of transactions in the entity's operations that are significant to the financial statements. The procedures within both information technology and manual systems by which those transactions are initiated, recorded, processed, corrected as necessary, transferred to the general ledger, and reported in the financial statements. All of these steps are very important. And we have to be very mindful of how all of these is being functioned and structured and controlled in the financial reporting process. So the IT piece becomes quite important out here. The related accounting records, supporting information and specific accounts in the financial statements that are used to initiate, record, process, and report transactions. This includes the correction of incorrect information and how information is transferred to the general ledger. The records may be either manual or electronic. So all of these considerations have to be taken into account. How the information system captures events and conditions other than transactions that are significant to the financial statements. So while a lot of companies would have these ERPs that would record your financial statements, but how about any investor grievances or customer grievances, how they are handled, how a fraud reporting happens, how those are handled in the systems. The financial reporting process used to prepare the entity's financial statements, including financial accounting estimates and disclosures. Controls surrounding journal entries, including non-standard journal entries, used to record non-recurring, unusual transactions or adjustments. So this was overall, I think, just to briefly give an overview. As I said.
Yeah, thank you, Rakesh. I think
Just 1 second. I can see this.
Hello.
Just 1 second. Yeah. Yeah. So as I said, so it's a very systemic approach that has to be taken from the management side. I think it's the primary responsibility of the management to have all the risks very clearly identified, the entity level risk and the process level risk. Then the controls assigned to all those risks. Then the risk owners are assigned, responsibilities assigned, and then periodic testing of the same. And I think, as I said, again, I'll touch upon that. I think the tone at the top is something which is very, very important. And the communications, internal and external. That gives you perception. And also you need to, whenever you look at all these control environments, you also need to look at what is the information publicly available. Is there something that you need to be aware of? And if you are aware of, how do you consider that into your audit procedures?
Yeah, thank you, Rakesh, for your insights on those important aspects related to the control activities and information communication. So, if I summarize what Vinay was talking and what you were talking about, was the tone at the top is very, very important. The way the management carries out the business and the way they are serious or the way they look at the control environment, that is very, very important for an auditor to consider. I think we have CA Atul Gupta ji also with us. I would request him to throw some light upon the monitoring activities or how important is monitoring of controls from an organization perspective, from an auditor perspective, when he is assessing the COSO framework or when he is assessing the entity level controls. Hello. Atul sir.
Good morning, welcome, sir.
Namaskar, Vishalji. Namaskar. Everybody, good afternoon. Good evening.
Yes, sir. So, sir, our speakers have thrown some. Hello.
Yeah, I got it, ma'am.
So, our speakers have thrown some light around the control environment, the risk assessment part, information communication, etc. Request your thoughts around monitoring.
Yeah. Thank you, Shardaji. And at the outset, thanks to Durgesh Bhai and Vishalji and the ICI for giving this opportunity, and nice to be part of this discussion. As our colleagues were discussing about the importance of this on the financial reporting, the internal control over the financial reporting, that the various aspects related thereto and why it is so important. Today, you witness that there are many, I will say, the collapses are there, or the companies are getting vanished overnight because of the that they are not able to mitigate one or the other risk well in time, and they have the poor internal control or the overall control on the various aspects related to the organization. And that's why at times you feel the heat and or not only the organization, but also the various stakeholders, including the employees, the investors, everybody. Our colleagues were also discussing about the various risks, and I'm just the day before yesterday, I was there in a program where I have to moderate a session on the cultural risk vis-a-vis the corporate, vis-a-vis the governance to have a resilient and the sustainable organizations. And in that particular session also, I touched upon that when we discuss about the risk, so there are the n number of risks which impact the organization, maybe technological risk, we can discuss upon, and then going on with the many risk. And these days, the new and emerging risk which is there is a climate risk. Because of that also, there is a huge challenge before the organizations to see that how that particular risk is going to impact the efficiency and the health of the organization in the times to come. Earlier days, this particular climate risk was being discussed more towards the values per se. Values, when I'm talking about, it's a more the moral values as compared to the today's today talk when it is being discussed as a value perspective. So it is a fight between the values vis-a-vis value. And now since it is a value driven, so not only that for the sustainability of the organization, but also for the investors' point of view, that you are looking for more and more investment, investors' orientation, you have to handle that particular risk vis-a-vis the internal control over the same. Now, friends, as our colleagues have already discussed, the few aspects of the internal control over financial reporting with all of you, and I am practically on the last leg, the last component of the internal this internal control over the financial reporting, which is the fifth leg of the 5 components. So there are the 5 components. I believe the colleagues must have discussed with you, and today I'm going to discuss. I'm going to touch upon or the throw some light on the 5th component, that is the monitoring.
Sir, maybe you can just make a slideshow. I think just move it to slideshow mode.
Yeah. So I believe now it is more visible to all my colleagues here. So friends, when I'm discussing with you the 5th component, so you will agree with me, the monitoring is practically a function where you are not only monitoring with the purpose of the detection, but also for the purpose of the prevention, in such a way that the efficiencies are maintained, the threats are mitigated, and there should not be any lapse in the part of the entire organization. So if you define what is monitoring is there in the internal control over the financial statement, it talks about the activities dealing with the ongoing and a period assessment. So it's more of a ongoing or a periodic assessment of the quality and the internal control by the management. So it's as being discussed by our colleagues that it's a management function to determine the control are operating as intended and they are modified. So when, as I mentioned you, that it is not only a detective but also a preventive monitoring, meaning thereby that you are modifying your control systems as per the requirement of the day. So for example, earlier you were not looking for the climate type of the controls that okay you are looking for, but now you have to modify your monitoring system to inbuilt the control over the climate side as well, and as appropriate for the change in conditions. So as rightly being mentioned. Now if you will go with this, so first of all, as I mentioned you that as we are defined. Now, if you will go with the COSO, which is also giving the 2 fundamental principle, that also speaks about the similar thing, that it's an ongoing evaluation which enables the management over the various component of the internal control, and not only talking about the deficiencies, but also they are taking the corrective actions as the board feels appropriate. So when we see the monitoring part as we are discussing, so monitoring part when we are discussing, So you will agree with me. Just a second. I have to manage the slideshow. So friends, when we are discussing about the monitoring part, just a second. Yes. Yeah. So friends, when we are discussing about the monitoring, first of all, we need to understand that it is not a one-time process. It is an ongoing process that, okay, every time you have to see that what are the new emerging challenges are there, and accordingly you have to develop your monitoring process. So you need to have a ongoing or a periodic assessment, not only for the quality, but also for the internal control, so that the controls which are intended are there, and they are regularly being modified as appropriate for the changing condition. So monitoring is actually so at times you will find that the monitorings, we feel that, okay, it's a post-mortem kind of exercise. No, the monitoring here try to define that, okay, if you see that based on your monitoring reports, based on your assessment, you feel that, okay, there are the further actions required, there are the further new type of controls required, or the change in the operations or change in the activities is required, then you are modifying your activities as well to have the better control or the better monitoring part. So friends, when we discuss this, and as I discussed with you about the next part, that is the COSO, now let us understand that why this monitoring of this internal control is important. So as I discussed and explained to all of you, that not only for the purpose of that, okay, to protect the effectiveness and the efficiency of the operations, uh, it is also to identify the problems in the internal control system, that, okay, you find that, okay, someday I have certain examples which I developed, that, for example, there is a variance analysis when you see the budget, or you find that, okay, there is a more the credit exposure which should not have been there, or some onboarding of a vendor which should not have been. So for example, some of my colleague onboarded a vendor which is a who is a very who is a friend of somebody, or who legitimately should not be there. So in that case, you have to not only identify, but also you have to correct the internal control system on a timely basis to maintain the efficiency of the operations. Then you have to prepare a reliable and accurate financial statement, because you are aware that the stat auditor, when it is coming, they have the test check basis. They are doing on a sample basis. And at times you will agree with me that we always write, when we talk about the CARO report or otherwise, that the effective internal control system is available in the organization or not. So the stat auditor always have a limited kind of a responsibility. The more and deep responsibility is available with the internal control system. So that's why the duty of the organizations to provide the various stakeholders the right kind of a financial statement. It is very, very important that we have a right kind of a internal control system available in the organization. And finally, the various compliances of the applicable law and regulation. You may have a sectoral regulator, you may have a national kind of a thing. Say, for example, when I'm talking about the sectoral, it means for example, you are NBFC, then the SEBI or RBI is the sectoral regulator, and you may have otherwise a generic regulator, for example, the CBDT or the CBIC or any other, that whether you are. So in case there is a weakness in the system, certainly there will be the lapses of the compliances, and the company may have to incur some interest and penal consequences. And that will impact not only on the reputation of the organization, but at times the sustainability of the organization as well. So my dear friend, so this is something that, okay, we understand that why the monitoring is required. And I believe that my earlier speakers must have discussed about this aspect, because that is I will say, whether you are talking about the one component or the another component, ultimate aim of internal control is this, which we are discussing about. Now, my dear friends, let us move to the next slide. And the source of monitoring. So I just prepared some illustration that may help our audience, that, okay, they will be able to understand that what I'm talking about. The first one, which you will agree with me, that in case you want to have a better monitoring in the system, the first one is the independence. That is the key of the entire discussion. That when you are thinking about the internal control, the staff who is doing an internal control should be independent of both. That is the operation and accounting. So it should not be a case that somebody is doing who is a part of the operations or the accounting purpose, then actually the maker checker concept will not be able to achieve. So that's the key, that that you should have independence of the things. And even when we are discussing about the auditor's appointment, this is again a very, very critical factor which we discuss and deliberate on at times, even in the ICI, that the independence of the auditor is a very, very important requirement to achieve the desired goals or the purpose for which we are all here. Then we have to have the exceptions, that there will be the source when you will be able to understand that you need some kind of a better monitoring, or you need to have the amendment in the controls. And from where it will come? It will be coming from a exceptional reporting. Say, for example, that you have a normal limit of 10,000 K. So any customer credit should not be increasing more than 10,000. But in case you have certain instances when the credit limit has been violated, then there is a chance that you need to enhance your control. You have to amend the things. Same way, onboarding of the new vendor, which I just mentioned, that for example, I was just discussing with somebody that in case you have a unique system of onboarding of a vendor, some coding system, and there is a vendor which is not following that kind of a coding system, and then it will be exceptional reports which will come, and that's the key where that you need to amend your controls. That is something there. Likewise, the budget review variance analysis is a common aspect which everybody is aware, so I will not touch upon because I have only 10 minutes to deliberate on the monitoring part as being given to me. So I believe that already 7-8 minutes is over. So I will be just rushing the things. Then we have a report by the regulators. So you will agree with me, when there is an exceptional report, say for example, there is a RBI inspection for the banking sector, maybe the SEBI inspection, or maybe the sectoral regulator is there, or some ISO kind of a license is there, and then there is a report that there is some gaps in the operations, then that should attract the attention of the team which is monitoring the entire internal control system which I am talking about. Then there will be certain feedbacks from the operating personnel that can be also a source of the requisite monitoring vis-a-vis the amendment. And finally, this is a new aspect, that is the complaint from customer. So in the original mode 10 years before, there was a very, very, I will say the passive system of customers complaint gathering. But today we are living in a social media era, when you will have a Google reviews, you have the website reviews, and even aggregator reviews. Say for example, you are in a traveling company, then the TripAdvisor or something can always give you the review that where your stands or where there is a gaps in the operation. Say for example, I traveled with a company, and based on my feedback, I'm giving certain reviews, or I'm giving some kind of a commentary or some kind of a comments on the reviews while I'm giving the review. That will become a source that there is a gap, because somebody say that I visited on a place, there was a vehicle which was supposed to receive me, but that vehicle came 15 minutes late. So there is a gap, there is a lapse, there is a operational lapse that required an internal control, better internal control. And that is something that maybe in a billing or something like that gives a lot of reports. So friends, I may give 100 such example, but these are the few instances where the better reporting will be available, better source of monitoring will be available, so that we can have the better monitoring can be adequately improved in the system. Friends, if you ask me that how we required a better monitoring system in the entire ecosystem, or the better internal control system, there are the few steps, starting from the establish a foundation for the monitoring, and then the design and execute the monitoring procedure vis-a-vis, then the assess the reports and results. So from where you will assess the reports and results, as I mentioned you that in the last slide, that there will be various sources, and based on those sources, you will be able to assess that whether the monitoring system is adequate, effective or not. And in case it is not there, then you will do a remedial action. As I mentioned you, that it is a continuous process. So monitoring is not a one time, monitoring is not a postmortem. It is a continuous journey, and it's ever going with the purpose that wherever there is a lapse, wherever there is a weakness in the internal control system, then we have to do a remedial action around that. My dear friends, there are certain actionable tips also I just jotted down for the internal control monitoring, which starts from the assessing the potential risk. As I mentioned you, say for example, onboarding of a vendor which should not have been more credit exposure which should not have been, are the kind of a potential risk which may be there. Then you have to identify the new controls. That okay, so these are the few steps just to guide my friends here, that you have to identify the new controls, that how you will be able to modify the existing control activities to mitigate the risk, and then you have to communicate those controls. So it is very important that we need to have a very good communication policy. So yesterday when I was discussing moderating a risk culture session, this was the key, that there should be a better communication. So every function will have, so it's not a duty of a CRO or a CRM to have the risk mitigation. It is the duty of every functional heads or even every employee, that there should be an open communication policy so that anybody can escalate the risk factor. Same way, whenever you have the control changes, there should be a proper communication mechanism, that everybody should aware that, okay, who is responsible for the implementation or carrying out those controls. Then you have to implement those controls because the communication is clear. So you have to document the changes whichever you are making, you are doing. And then finally, again, a careful monitoring of the organizational control activity, so that the effectiveness of the changes or effectiveness of the outcomes should be well monitored or reviewed by everybody. Friends, as I've been discussing, my time is practically over. But just to share with you that there is always a difference between a preventive and the detective control. So every manager or every CFO or everybody in the organizations, the management, should understand that there is an ecosystem, and the ecosystem talks about not only about the detective control. There are the way that you can have a preventive controls as well. And practically, if you check in the last 10-15 minutes when I'm speaking, it is more towards the preventive control, that you are reviewing your control system every time and based on certain sources, and then you are modifying your control so that there should be a preventive aspect being taken care. This is the same thing which I just wish to touch upon, because this already I have spoken. So the governing body, where that includes the management, that the first line roles and the second line role, which talks about the various action points, and then the internal audit system is there, which is giving independent assurance. That is the third line role. So this is something that we need to have the ecosystem around towards the internal control over the financial reporting, which we are discussing about. My dear friends, there are the various tools which are also there, that okay, the communication and the collaboration tool, the security focused generic tools, the regulatory aspect, the document management systems, the data mining, and then the business performance management. These are the various, I will say, not only the tool, but also the way forward, the way that you can have the better internal monitoring of the internal control, which is there. So practically, friends, these were the fifth and the last aspect of the internal control over the financial reporting. I believe that the Durgesh and Vishalji, along with Madam, try to give an overview of the aspect concept in the first 1 hour. And I believe in the panel discussion, there will be more detailed deliberation where our respected colleagues from the profession, Vinayji and Rakeshji, who are the expert of this topic. So I am not the expert of this topic. You are aware that I am the more of an indirect person, but since the madam has given me the responsibility based on my role as a president or the past president of the ICI or even the IFAC board member, that I try to justify. So maybe I exceeded my limit that the experts are available, and I'm speaking more on the internal control side. But I believe that they will. So in case anything is there which they wish to do the value addition into my discussion, so I will be happy to hear that. Thank you, madam, once again, Durgesh ji and Vishalji, for giving this opportunity. Over to you, madam.
Yeah. Atul sir, you have been very modest when you are talking about that you are not the subject matter expertise. I think the key takeaway from monitoring, if I have to look at it, it has to be a continuous monitoring, as you very clearly mentioned, for an organization, and that's what auditor needs to look at. And I think the aspect of risk being evolving, and as an auditor, we need to be aware that, like you touched upon the climate related aspect. I think that is very, very relevant in today's times. It is very important that an auditor keep his eyes and ears open, look for the new risks which are emerging, and see how management has plans in place to mitigate the same. So I think it was very, very insightful, sir. So next, I would say an hour or so, there are few questions which I would request the panelists to discuss. So I will start with the questions and direct it to one of the panelists, but I would request other two also to share their views in case they want to add something about it. So to start discussion on it, the first question or the important consideration I would say, which comes up is, what are the key considerations which an auditor should keep in mind while planning the audit of internal controls over financial reporting? So Rakesh, any views over there that what are the key considerations which you believe should be kept by an auditor in mind?
So before coming to the key considerations for internal controls on financial reporting, I think that I'll talk more. But I think one of the key considerations for any reporting or any auditing is, the first and foremost that I would say is that it has to be a very proper planning. For any audit, the planning is the most critical aspect of any audit. So the planning has to be something which suits the business and the auditing objectives. So planning and then supervision, both are very important. Now, for do a very good and effective planning and supervision, I'll take a step back. How can we ensure that? So that can be ensured by doing a very detailed and exhaustive understanding of the organization, how it functions, how it is structured, in what environment it operates, whether it is highly regulated or not regulated. Okay, how which industry it pertains to, because different industries will have different aspects to look at. Say, for example, a real estate and infra would have different. Electricity company would have a different this thing. Even in electricity, generation would be different, discom would be different, and even the structures overall, how the governance structure and the organization structure is. So a very detailed understanding of the organizations, the stakeholders, and understanding that helps a lot. And then we can come to in the key considerations that possibly you may touch upon. So see, when you do an audit of the financial statements and the ICOFAR together, I think there are certain key considerations that we need to look at. One is knowledge of the company's internal financial controls over financial reporting that we would have come across maybe by doing some earlier engagements, right? So if we have done certain engagements, we will have some perspective of the internal financial control environment. What are the matters affecting the industry in which the company operates? Like I mentioned, real estate infra. So there is a lot of regulation, for example, NHI. So I think claims is one important aspect of any infra company. In real estate, you have to be understanding in the geographical aspects where they operate, whether how much, because everybody knows that there are this industry have been very much known to be using cash components and all that. So then the matters relating to the company's business, including its organization, characteristics, and all of those, which I touched upon. Then the extent of recent changes, if any. Say, for example, it's highly regulated. And if there have been recent changes, for example, very recently, the NBFCs were asked to start using Ind AS, right? So the recent changes that have come into, all of those have to be looked into. The auditor's preliminary judgments about the control environment. As I said, when you do a organization structure mapping, you sit with the key stakeholders and do a brainstorming and understanding how they operate. You get to know a lot many things as to how they operate and how serious are they about certain things. So that gives you an understanding, your understanding of the materiality, the risks, then the legal and regulatory matters that may be there. So understanding of those legal and regulatory matters are very key considerations. The type and extents of external evidences that are available. Then also the public information. For example, if there are public information, I say let me talk about telecom industry. So there are huge overdues which the government and the industry is trying to understand. So all of these things are very, very important. So for an auditor, it is very important to understand in which environment it functions, what are the external information available with respect to that industry sector and specific to those companies, and take all of those into consideration.
Okay. Thank you, Rakesh. So basically, auditor needs to look at the sector and then look at the regulatory environment and then start planning for the audit. Yeah. So there's next question, Atulji, which I would request you to answer. Can an auditor use different materiality for forming an opinion on the ICOFAR from the one which would be used while planning the audit for financial statements?
Shraddhaji, as my dear friend Rakeshji just answered for the first question, and even I believe that in the last 1 hour deliberation, you will agree with me that it is always an evolving journey. So continuous and evolving journey, and based on the certain historical materiality or the fundamentals or some planning part. As you ask the first question, practically it's I will say the extension of the first question only, that whether the planning which was being initiated historically will suffice the purpose, or it should be having the flexibility enough. So when we are discussing about the materiality, it always a subjective things. It's always about the perception. And while conducting the internal control or otherwise, the internal audit or otherwise as a stat audit also, it is not that, okay, if you set the materiality, because I don't want to enter into that situation, because I headed the disciplinary committee also. And there were a number of cases which I witnessed that in the name of a materiality, you will say, no, it was because of the within the materiality, I will not touch upon that. I didn't touch upon that. So it is always that you have to understand the necessity, the importance, and the gravity of the issue, and based on that, the materiality. So materiality is only for the purpose that, okay, you have to do a sample testing. You have to do a kind of management by exception. That, okay, you will say that, okay, below this level of amount, I will not touch upon. Say, for example, a company is over 500 crore net turnover. You will say, I will not touch upon the expenses less than rupees 1 lakh. But if you feel that a vendor is there, which is actually not supposed to be there in the system, and then even if it is less than 1 lakh rupees, the materiality will not matter. So I believe that the materiality is a kind of a comfort which is available to the auditors, but not for the saying that, okay, I will not owe the responsibility. Or if the issue is having a gravity, I will not check, because that falls under the definition of a materiality. So ultimate purpose is what? Ultimate purpose is that your financial reporting, whatever the financial statements are there, that are showing giving a true and fair view on which the different stakeholders can rely upon. Now you cannot say that, okay, I followed the materiality, that's why this is a subjective. That, okay, you are trusting the financial statement based on your own risk. So that you can't say. So I believe that I answered your question, that the materiality is always a flexible thing which depends on the various factors.
Yeah. So basically, yes, very, very rightly pointed out that materiality is something which is a professional judgment. It has to be used from a sampling perspective. Auditor also mentions that in his audit report. But when it comes to evaluating any deficiencies, looking at certain things, I think risk for a particular observation, or what risk will it pose to the financial statement, is something which is very critical for an auditor to assess, rather than only sticking to the materiality. So materiality, yes, is important, should be utilized, would be used, but evaluating deficiencies and keeping an eyes and ears open and assessing the risk is something which is very critical. Very well said, sir. Let's move to the next question, and Vinay, I would request you to take it. As per your view, is it sufficient to check only the changes or modifications which are made to the control when the past auditor confirmed that the controls were reasonably effective?
Thanks, Shraddha. I think it's a very kind of a tricky question, and something that most of the auditors would have in their mind as to should this be tested, should this control be tested year on year if it has been passing and there are not significant changes, and then what is the need to test this again and again. But I think firstly we need to understand that the ICOFA testing, the internal controls testing, consists of three significant parts. I mean, the first part is obviously the understanding of the process flows and the testing of the design and the implementation of the controls. So these two parts have to be done every year. Every year we need to see if there are, we need to understand the process flows. Every year we need to test the design and see if the controls are implemented. However, the last part, the last leg of the testing is the operative effectiveness of the controls. So this is something where we can derive comfort from the previous year's audits. But again, there are certain conditions to it. So what we need to ideally do is that if at all we are taking the help of utilizing the last year's test results, we need to understand what kind of comfort we have. Were there any significant deficiencies in the previous year's testing? If there were no deficiencies, we need to also look at the current year's changes, if any, to the system. Understand the controls of the current year's audit, and then do a test and see if there are no changes. Then we can rely that the previous year's tests hold good. However, if we understand or if we are aware that there are significant changes in the controls as compared to the previous year, as an auditor, first, what we need to definitely do is that perform inquiries and inspection to confirm the understanding of the controls. And if we are of the opinion that these changes would have an effect on the relevance of the last year's audit evidence, then definitely the auditor will have to test the controls in the current year as well. However, if there are no changes, the auditor may do the test. I mean, what is recommended is the test of the controls can be done once in 3 years, which means there are no changes in the controls. It is continuing as it is for the past 2-3 years. You still have an option of a rotation testing. I mean, that is what it is called, rotation plan testing, where you can still do it. But again, we may end up in a situation where in a particular year, we don't do any testing. So it is always recommended that we cover in a cyclical manner when there are no changes in the test, and so that every year we test on some of the key controls. So that is something, this is an option that is given that the institute suggests that the auditors may avail this thing if there are no changes to the controls in the past years.
I think C. Atulji wants to add something.
Yeah. Thank you, Shraddha-ji. I just add to my friend Vinay-ji that, madam, when we are saying about this past audit, these controls are reasonably effective. I believe that it is very, very important that today, actually, if you agree with me, the entire financial system evolve around the economic developments, and the ecosystem never allow us to remain stagnant. So I believe that with the ever-evolving ecosystem, it is very, very important that the control systems, whether they were sufficient in the last year, whether they continue to be sufficient in the current year or not. That's the key. I just give you an example that, for example, when we are discussing about the climate risk only. So last year, it was not so. But this year, you have to again undo and you have to reskill your skills. That, okay, what kind of controls will be required. Similarly, today, when you have this kind of a digital disruption and a lot of cybersecurity issues are there. Earlier, we were having an ABC.
Yeah.
A for apple and B for ball and C for cat. Today, A stands for artificial intelligence, B for blockchain and C for cybersecurity, rather than A for apple.
Yeah.
So the cybersecurity threats, every time you have a new threats. So you can't say that, okay, last year the controls were effective, so I should not worry about that. So it is the underlying ecosystem which will define whether the control systems which were relied upon last year will be sufficient to rely upon this year as well. The ecosystem matters rather than the controls.
Yes.
Absolutely. I think rightly pointed out, Atulji. And also, as a conservative auditor, I think we must refrain. Though there is an option, or there is the guidance note does give this option. I think as auditors, in fact, at least in the audits that I have done for so far, I've never availed this rotation kind of a plan. I have not heard of auditors doing this as well. Though the guidance note talks of it, as a conservative auditor, I think we need to test all the controls on a yearly basis. Though if the controls are non-key, you still have an option. If it is really non-key, then maybe you can still avail this option.
Vinayji, I used to say that auditors are the conscious keeper of the society.
Yes.
So when there is that aspect is there, so you have to check the conscious of everybody and the entire ecosystem on a continuous basis, rather than saying that, okay, I will rely upon, as you rightly mentioned.
Yeah. Yeah. I think very relevant and good points, Vinayji and Atulji. Let's move to the next question. And Rakesh, I would request if you can take it. Is it possible under any circumstances that the main auditor's report has not been modified, but ICOFAR report has been qualified? And if so, can you cite any one or two circumstances where you believe it could happen?
Okay. See, the very fact, that a modified report on internal control, internal financial controls over financial reporting does not imply that the audit report necessarily has to be qualified. Why? Because, in an audit of financial statements, the assurance that we obtained is by testing the controls and also doing substantive procedures. So it's not necessary that if an ICOFAR report is qualified, we will have to necessarily qualify. And let's take one step back when it comes to qualifying an ICOFAR. So in your testing of the controls, as I talked about, design and implementation and operative effectiveness, right? So, and then you see that there is a material. So then there are various levels of this thing. So there is a deficiency, then you have a significant deficiency, then you may have a material weakness. And if there is a material weakness, then that also necessarily has to be evaluated whether it has the potential of leading to material misstatement in that particular line item or account balance. So that's the logical flow of how you would qualify an ICOFAR. So even if you were to qualify ICOFAR, say for example, the control is not working, as I said, say for example, let me take one example. So if there are 3 controls, out of which one control failed because of design and implementation, as I said, that we did not test that. So, but are there other mitigating controls? And if there are mitigating controls that say that, okay, fine, while this control failed, but there are other mitigating controls, so then that's fine. And even if there are not mitigating controls, it's the management's responsibility to demonstrate that there are other controls which kinds of takes care of or otherwise rectify it. And if the management does not demonstrate that there are other controls or rectifies it, then it leads to possibly maybe lead to a qualification. Now coming back to the question is that whether, when we said that whether ICOFAR is to be covered, as I said, in ICOFAR we do primarily the test of controls. We don't do substantive procedures. So even if a control has failed, I can do substantive procedures and see whether the reported balances or the financial statements are still correct. So if in an possibility, say for example, that cashier example, the controls failed and all that, but if there is a mitigating control or if all the balances that we tested, let me take another example. So for example, if the client acceptances or client underwriting or the credit limits and all of those things, those controls are not being met, right? Then you say that the control is not met and you may wish to qualify because the ultimate revenue recognition or because of the realizability of those balances may be a question. You may wish to qualify your ICOFAR report. But if I go, when it comes to auditing, I would like to see, so say for example, I have obtained all the account confirmations, balances and all of those. I've also seen subsequent realizations of all those amounts. So that my risks have been already demonstrated that they are not there. So then I would not qualify. And also, just to also add there, when we do this in ICOFAR, we look at the 2 things, likelihood and the magnitude. That's how we go to the qualification of that. So if it is remote, or whether it is reasonable, whether it is immaterial or material. So I think there are different considerations, and that's the reason why most of the times, and I think everybody now does both the things audit together, and that's also the right thing to do. So I think I've explained that it is not necessary that, because there you just test the controls, but you have another procedure that is substantive procedures. If you can do that and get your audit evidence in comfort, you may still not wish to qualify.
Okay. Fine, Rakesh. I think well explained to say that yes, there could be such scenarios and auditor needs to
Yeah.
well. Let's move to next question, Vinay. And one of the important tasks in evaluating the adequacy and operating effectiveness of internal financial controls is identifying the significant account and controls. So, when an auditor is identifying the significant account, what factors must be considered by an auditor? And are all high value accounts significant account, or how are significant accounts basically identified?
Yeah, I think when as an auditor, when we identify accounts or significant accounts, though obviously high value accounts would feature in there, but I would say that it's not just the quantum of the account. We will have to look at the both quantitative as well as the qualitative risk factors here, which are related to the financial statement line items as well as the disclosures. So it is not just to the account balances that are there in the financial statements, but also it could be relating to the disclosures. So as I said, it has to be both quantitative as qualitative risk factors. So one, obviously there are various factors. So one definitely is the size and composition of the account. For example, if it's a large a manufacturing company with a significant amount of capitalization that is done and involving borrowing costs, obviously that definitely would get picked up as a significant account. That is one of the factors. The other factor would also be the susceptibility to the misstatement of fraud. For example, if as we review the receivable balances, if we tend to identify that there are significant long outstanding balances and provision has not been made and there is a doubt on the recoverability, obviously that is also there. So there are areas where, or there are components where, which are susceptible to fraud or errors. These are the things that the auditor has to be vigilant of and look at it. And also similarly, if there is a possibility of a contingent liability, for example, because of certain regulatory changes, for example, let's to give an example, let's say the company has received a notice from the income tax department, demand notice regarding, let's say, a transfer pricing issue, which might open up the earlier years as well. And there could be a potentially large a tax payout, which the company feels that it is going to be a certainty. Then that is something that we need to factor as well. I mean, that is also going to be a risk. So that is something that we need to look at. And similarly, if the company is on a rapid growth, so obviously, let's say year on year, it is 100%, 200% growth, then that is something that we need to be really watchful of. Then we'll have to look at the relevant components and identify and ensure that we scope those as well for our internal control testing purposes. And most importantly, as an auditor, I think what we should, the mindset that we should have is what can go wrong in a particular component or a disclosure is something that we need to be mindful of. And I think our approach should be that way. When we have that kind of an approach, I think we will definitely have the right, set of, maybe all the relevant accounts and disclosure items would definitely come into our testing criteria.
Okay. So basically, qualitative and quantitative factors both needs to be considered while evaluating or while deciding which significant accounts to be considered. Fine. One more question, Vinay, just connected to it. What are dual purpose tests? And as an auditor, can you share any scenario or any instance where an auditor would use a dual purpose test?
Yeah. So dual purpose test is again, it's what do we say? Now, for example, let's say we have, basically there are two tests that we carry out. The purposes are different, the objectives are different, but it is more or less happening concurrently or parallelly is what is called a dual purpose test. Now, for example, let's say we are doing a substantive test as well as a test of control of a particular activity or a control. That is when it is called as a dual purpose test. The most relevant illustration or example that I can talk of is let's say, a fixed asset addition. Now, for example, when we do a fixed asset addition a test of details, obviously what we look at it is whether the accounting as per the relevant gap, the accuracy, the cutoff, occurrence, and so on. These are the aspects that we look at. Whereas when we do an internal control testing of the fixed asset additions, we look at approvals, if there are any exceptions. Again, accuracy and occurrence would also be part of it. So there could be an overlap, but it is not a substitute, and both will have to happen parallelly. So we may maybe derive some comfort from these two tests, but it is definitely not, or it doesn't mean that, let's say, if the substantive tests have passed, it doesn't mean that the test for controls would fail or vice versa. So as auditors, we need to be very careful when we consider, I mean, if you are going to do it, we have to consider both the tests and appropriately design and apply the test separately. I mean, we can't consider a single test and then say that it is satisfying both the criteria. So, I mean, this is more of a convenience. For example, when we are doing a fixed assets additions, we may have, let's say, 20 samples or 30 samples, whatever the sample size. We also have to do the test of controls. So obviously, for convenience sake, we may use the same samples, but the approach, the objective and the purpose is completely different. So this is about the dual test.
Yeah. So basically, the objective you are saying of the two tests would be different, and those objectives should be independently met. And the attributes also would be different when you would be performing it for substantive vis-a-vis control audit. Yeah. Thank you for your insights. And next question, I would request Rakesh to take it up. During the audit, there is a lot of information which is provided by the entity, and we generally call it as IP, which is information provided by the entity. What procedures can the auditor use to perform test of controls of the IP to ensure that IP is accurate and complete? So, Rakesh, largely there is a lot of discussion around IP and completeness of IP, and it is very critical. So, how an auditor can obtain comfort on the accuracy and completeness of it?
Okay, so let me answer it this way: that why there is so much discussion about IP, right? You said there is a lot of discussion about IP, and why is it relevant? So it is relevant, why? Because the employees or the entities personnel perform their relevant controls basis these IPs. They use these IP to perform this. Then also the auditor has to test the control. That's the reason these IPs are important. And also the auditor has to do substantive procedures. That's the reason these are relevant. So that is the relevance of IP. Now, having talked about the relevance of IPs, what are the risks associated with IPs? Right? So the risks are that not all data is captured. You have left out some data. So there is if you are doing a data's analysis, so there are two account codes. One is for domestic debtors and one is for foreign debtors. And you are asking for a report, the person generates only for domestic debtors. So that's incomplete. So there's a risk. Then the data is input incorrectly. If there is an exchange rate to be inputted, it is dated, it is not on the closure date. So it's incorrect. That is a risk. Then the report logic is incorrect. You wanted to do an expected credit loss allowance for maybe say more than 30 days, but the person does 45 days aging to show it a better results. So the logic is not correct. Then even on the logic and the source data, if there are unauthorized changes that are possible, then the data may not be accurate or not authorized, or maybe inappropriately. Somebody can change that. Then the user enters the parameters are the user entered parameters are incorrect, as I said. So for example, so these are the risks that we run with IP. Now, so when we are considering a particular IP, so what an auditor has to do is that understand that what could go wrong to generate that IP. That's then coming. So first I spoke about why is it relevant, what are the risks. Then as an auditor, I will say what could go wrong, and then understand. And it is very important that if that IP is largely generated by IT systems, it is always better to involve your IT specialists. And when you involve your IT specialist, you have to very clearly state the objectives, why that information. So the IT people are IT, unless you tell them what's the relevance and what is the test you are doing and all that, then only they'll be able to do justice. So there has to be a very close coordination between the auditor and the IT specialist to understand that. Then there are three steps possibly, right? How do you do so? And so what I do, I'll tell you very in a layman's language. When I take an AIP, I sit with that person who is giving me that that information. Then I'll do all the inquiries that how did he generate that report, from where did he generate, what was the logic applied, how did he do it, and I'll maybe sit with him in the system and see how he's generating it and does that. So it's very important that the person who's generating that information, so understanding that will help us a lot. So identification and understanding the report, logic and the parameters. That is the step to take to get comfort on the accuracy and completeness. Then the second is identification and understanding the source data. As I said, say for example, you wanted an entire data list, but he has given you only domestic data list. Okay? Then the third step would be building the IP diagram. Then again, I think that will be more taking help of your IT specialist.
Yeah.
So this is the logical process that we can follow. Say for example, if I'll give you an example, if a debtor's report is completely generated by the IT systems, okay, so or for that is one example. And suppose in another scenario, the report is generated, but then it is dumped into an Excel sheet, and then a lot of things are done. Now, in the first case, since it is a system-generated report, I will have far more level of assurance as compared to if it is input into Excel and a lot of things are done over there. Because then there the chances and the possibilities of what could go wrong, gets far more than as compared to the earlier scenario. So I think these are the considerations that one should look at. And it is very important, one suggestion from my side is that we should not start doing audit as soon as we get an information. We should sit back and understand it, realize whether it is what you wanted, have a discussion with the person providing with you. And once you are satisfied that it is the data that you wanted, then only start your audit process. Otherwise, in our practical examples, we have seen the person has provided data, and we have done a lot of procedures, spent a lot of time, and at the 11th hour of audit, he'll come back and say that data was not appropriate. This is the right data. So it's very important before you do start any, please screen and maybe analyze the information that is given to you.
So basically, complete and accurate information is very, very critical to assess.
That's very important, but I just explained the logical steps as to how do you look at this. Why is it relevant? What are the risks? What could go wrong? And what are the steps you need to follow?
Yeah. Thank you so much for your insights on that IP aspect, and we understand the importance better now. Let's move to the next question. Can an auditor perform test of controls for interim period? And if yes, what are the important considerations while planning a roll forward testing? Vinay, I would request if you can take it.
Yeah, definitely. I think an auditor can definitely do a testing of controls for an interim period. That is for sure. But however, we will have to plan a roll forward to ensure that the operating effectiveness of the controls for the remaining period. So to do this, I think first thing, as an auditor, what we need to do is that we need to carry out all those procedures to determine whether there have been any significant changes in the business or in the financial reporting framework, which may give rise to the new risk, or which could modify the existing risk. That is something that we need to definitely do. Some of the considerations here would be higher the risk associated with the control. I think the more persuasive the evidence has to be from the roll forward procedures. So it depends on the risk as well. And similarly, if the evidence that we have obtained during the interim period was sufficient enough, or it was more persuasive, then it could be less. However, it also depends on the length of the remaining period. Let's say that if the interim period is sometime in December or November, and then March you need to certify the effectiveness of the controls, operative effectiveness of the controls, then I think it's 3-4 months is a long period. So then definitely as an auditor, we will have to go for persuasive evidence, and we need to, unless until it's a very short period. And if the risk is high, for sure, mere inquiries won't suffice. We will have to definitely do our homework, and that is one thing. Similarly, there could be significant changes between the time when the interim audit or the test of controls was done towards the end of the year. For example, new business lines could have opened up, or there could be a new controller in place or a new finance head in place who may not have the same focus or the same the same for control, who may have different industry experience. If that is the case, definitely I think we need to look at persuasive evidence, and it has to be done in detail. We just can't do inquiries and satisfy ourselves. Similarly, I think it also depends on the degree of reliance that we have placed on the evidence that we have received in the interim audit. If that is the only control to mitigate the risk of material misstatement, then for sure we can't be satisfied with that interim audit testing. We will have to definitely do a detailed testing again. So though we have options, but I think we need to be mindful of these aspects and take care.
Okay. So basically, it depends upon a lot of factors that what procedures you perform in a roll forward testing. Let's move to next question. And Rakesh, this is for you. What are the important considerations an auditor should keep in mind while evaluating and assessing the impact of deficiencies noted while testing the controls?
Okay, so I'll just again refer to my earlier discussion, wherein I brought about in the reporting of the internal control financial reporting. I stated the levels, how it is to be. So basically, anything assessing the impact, it is on the two axes. One is on the likelihood and one is on the magnitude, as I said. So the magnitude could be immaterial or material, and the likelihood could be remote or reasonable, right? And that's how you would access it. So, and then I said the 4 levels. So when you come across certain deficiency, and then how serious is that definition, whether it is significant or not significant. And so a significant deficiency could be, individual deficiency, which is very significant to impact that account balance, or a combination of various deficiencies, which could lead to a significant deficiency. Then a material weakness would be, where there are reasonable possibilities of a material misstatement happening, and that requires, information to those charged with governance. So that would be material weakness, and then that has to be assessed to see whether that requires reporting or not. And if it is not required reporting in the report, but at least and suppose if there is a remote possibility of a material weakness happening. So while there is a remote possibility, but then that also has to be reported to those charged with governance, because you are then sitting on a time bomb. While it is remote, but it can happen. So that material that has to be corrected. So having said that, so those 4 levels, as I said, are where you decide whether how those are to be understood. And then what are the risk factors that affect that there is a reasonable possibility that a deficiency or a combination of deficiencies will result in misstatement. So what are the risk factors that you say? So the nature of the financial account balances is one. Disclosures and assessors involved in those particular things. The susceptibility of the related assets or liability to loss. So for example, there would be different nuances for an inventory or a cash. The susceptibility, if there is no control, there is a if it is an inventory, there is a possibility of a pilferage or a fraud or what. So the susceptibility of the nature of assets is very important. The subjectivity, complexity, or extent of judgment required, to determine the amounts involved. So if it is complex, if it is quite subjective, then that is also to be considered. The interaction of the deficiency and the possible future consequences of the deficiency. As I said, so while it is remote, but then it can occur in future. So all of these risks are to be seen. Then the multiple control deficiencies that affect the same financial statement, account balance, or disclosures increase the likelihood of those deficiencies leading to a misstatement. So all of these considerations are very important, and hence the auditor should evaluate the effect of and also then we should see at the compensating controls or the mitigating controls that I spoke about, or there are alternate controls. All of that has to be considered into doing your assessment of the control assessment.
Okay, Rakesh, understood. Uh, Atulji, one question for you around management representation. How significant it is to obtain a representation from management in respect of ICOFAR? And what would be important points which you would suggest to our, I would say, to our participants today, which they should insist on to include in the management representation letter when they are obtaining one on one on any of the audits?
Shraddhaji, when I spoke initially, when we were discussing about the monitoring part, I touched upon one aspect is about the independence of the auditor, the guy who is doing this internal audit to check the internal control and all these things. And when I was saying that, you will agree with me that when you are independent, meaning thereby that you are looking for certain information or the completeness of the information from the management. So it's very important that when you are doing, it is, I will say the most important aspect is that you have a representation letter from the management. Now, the second aspect you touch upon that what should be the significant points or the inclusion in the representation letter. There will be many, but I will just touch upon the three aspects. Number one, that the completeness of the information, because there should not be a case that the certain financial records, financial transactions are not getting recorded, or you will find that you are not getting certain, for example, some agreements are there, or maybe I will go further that that you have certain regulatory letters are exchanged, certain regulatory letters are there, they are not being shared with. So one aspect is that there is a completeness of the information which is being provided, and number two, that the financial records which are provided, which they capture not only that the true and fair view I'm not talking about, but that is the job of the auditor to assess, but that carries all the transactions. So one is the unreported, the another is a completeness of the things. So these are the two very, very important aspects are there, because when you look for the recognitions, measurement, or the disclosures, say for example, there will be instances of the suspected frauds, alleged frauds, the guarantees, estimates, contingencies, the communication with the regulators, the absence of certain unrecorded transactions, agreements. All these things are there, which should be part of the management representation letter, the inclusion in the management representation letters, suitably classified that there is a completeness of the information, all records are, informations are being provided, and then the all transactions are well recognized, measured, and disclosed. So these are the few aspects. Maybe my colleagues Vinayji or Rakeshji can also gives their views on this aspect, because they are day to day handling this aspect more into.
Yeah, I think just to add on to Atulji's point, I think one of the most important things is, I think as auditors, we also need to take a representation that, I'm not sure if Atulji mentioned this, but if in case I've missed this, management has actually performed an evaluation and they have done a proper assessment one. And management does not use auditors' procedures. They have to ideally do an independent testing of the controls. So I think these are a couple of basic points that I think we need to ensure, and management also should be made aware about the seriousness. I mean, it's not just the auditor who's going to test and report. They also have it's a parallel responsibility. So even directors mentioned this in the director's responsibility statement. So that is something that I think we need to definitely point out.
Yeah. So basically, yes, completeness of information, management testing, deficiencies they have noted, and maybe the subsequent events, if any, which is impacting the control environment. I think these are all critical aspects to be covered from a representation letter perspective. I have one question for you.
Just to add there, while Atulji had very comprehensively covered and Vinay also added on management representations, I think one of the thing I'm just talking about in general about management representations, and that's my experience as an auditor. So as auditors, I think we should keep down listing out things that wherein we need representations all throughout the audit, because if we don't do that, And if we sit back and then do that, see, most of the time people, tend to do the mistake of, doing a standard management representations. Every management representation for every audit has to be very unique, and there are very specific things that should necessarily come in. And I think the auditor should clearly keep on noting down the areas and the matters on which they would need representations. If you don't do that during the course of the audit, and if you just want to sit after you have completed the audit while you are reporting, trying to put everything together, you may miss out on certain aspects. And let me tell you, it is one of the very, very critical piece of the whole audit engagement. Even the regulator would like to, because there are a lot of things that we would rely on the representations. And as Vinay pointed out, and Atulji were also saying, because that reliance has to be clearly demonstrated, and that has to be seen. So I think it's very, very important, and it's a very important piece of document that is required, and which has to be comprehensively covering all the aspects of that audit.
Yeah.
And I think rightly mentioned by Rakesh ji, I think it can't be a standard template that we use for all clients. I think we have to be very clear, and I think the team members have to be very clearly trained. And it's not like a one size fits for all kind of a thing where we use it for all kinds of audits, depending on the irrespective of the complexity or the size and nature. I think that's a very valid.
Yeah. One question to you, Vinay. What is the role of audit committee in monitoring the adequate and effective internal control system?
I think this is, one of the most critical points as well. I think because an audit committee ideally should be an independent and an active audit committee. I think that's a prerequisite for sure. And ideally, even in fact, the Companies Act does mention that the audit committee can call for the comments of the auditors on the internal control system, the scope of the audit, the observations, and review of the financial statements even before it is submitted to the board. So I think audit committee has that kind of they owe a duty of this thing care, and it is a responsibility that I think they should also take when it comes to the internal control system, because the Companies Act is giving them all the rights. So I think, and in fact, they may evaluate the IFC, the internal financial control system, as well as the risk management system of the company. So these two, I think, rights are already given by the Companies Act. So I think besides that, I think definitely they should involve actively and at least on a periodic basis interact with the auditors on the internal control specifically, because these are the controls. I mean, if at all something goes wrong, and obviously the blame is only on the auditor and nobody else. So I think the responsibility has to be definitely owned. I mean, it has to be owned up. And I think when they have this thing, they have a duty to adhere to the Companies Act has given them certain duties, so that they have to adhere to that, interact with the internal auditors, and also see what are the points that are arising out of the internal audit. I think those could be indications of where the control weaknesses are there, or if there is a breakdown in the internal control system and so on. And also if there is a whistleblower system in the company, definitely I think what were the instances, what happened to them, and what were the reports and how they were resolved, and so on. I think these are some of the points I think which the audit committee should definitely take care of. And also there could be areas where the management has made certain judgments or estimates on certain aspects. So that is something I think the audit committee should definitely sit down and talk to the management, understand what is the background, what is the basis, and whether it is reasonable enough to have a estimate or a judgment like this. So I think these are certain critical aspects which I think the audit committee, being an independent board, I think should definitely look into.
Okay. Thank you, Vinay, for your thoughts. And I have last question, and I would request all panelists to share their views. What are the 2 or 3 key important aspects which should be kept in mind by an auditor while opining on the ICOFAR? Any 2 or 3 key aspects which you believe are very, very important considerations? Rakesh, would request if you can start.
Yeah, so I think, see, according to me, when the auditor is forming an opinion on the adequacy and operative effectiveness of internal controls, I think one of the first key thing for me is evaluating the evidence obtained from all sources. So I think evaluation of the evidence and that to obtain from all sources, internal, external, as I was talking earlier, that we need to look at all sources of information. So that is the first thing that I would mention. The second, I think, evaluate the disclosure that the management and the board makes in their reports with respect to the internal financial controls, because that's very important. And if there is, and then we can bring in that say 720 into this, because a lot of time that is missed out in this aspect. So whether it confirms to our understanding of the internal financial control environment, is there something which is not mentioned or which is not what we believe is right. Then the third thing comes in terms of reporting requirement as per SS 720, because I think most of the times, as far as ICOFAR is concerned, this SS 720 aspect is something which kinds of gets missed out. So I think evaluation of all the evidence is to finally decide on your or maybe concluding on your opinion. So evaluation is very critical, and that too from all sources of data. And then also in terms of what is the management, because I think as Vinay also was pointing out, and Atulji also said, that management, it's the primary responsibility of the management first of all, right? And how they look at it, and what is the disclosures and they are giving in their management reports and board reports, and whether they are in conformity with our understanding and evaluation. If not, then as it 720 reporting. So that's from my side.
Okay. Atulji, any thoughts on important considerations?
Shraddhaji, though Rakeshji has covered practically most of the things, but I will just give the three words. One is relevance, that when we are looking for the internal control system, how relevant is that? So no stereotyping, regularly reviewed and modified. So that should be the key, that the auditor should see whether the internal control system has been modified and revamped on a regular basis to take care of all the new aspect, the new instances, and as he mentioned about the new any kind of observation. So the relevance of the internal control, internal audit system is the one point. The another one is the independence. Because you will agree with me, as I am third time I am discussing about this aspect in my discussion, that the independence is the key, that unless and until that is not independent, so whatever you will do, that will be only I will say the bookish kind of things, rather than you are actually doing something. So that's the key. In my view, whenever I'm discussing about this aspect, maybe as a past president or the then president also. So the independence is the key. And the third one, which already Rakeshji mentioned about the extensiveness, the comprehensiveness of the thing. So I will not touch upon that because that will be a repetition only. But three words are for me are important, that the relevance, independence, and the comprehensiveness, or you will say the extensiveness.
Thank you so much for your thoughts, Atulji. Vinayji, any thoughts?
Yeah, just one point. I think typically when we talk of audit of ICOFAR, I think what happens is at least the audit team, they just blindly jump into they take the RCMs, they do the testing, and they document. So first of all, I think the design itself, we are going to also comment on the design. So I think we need to invariably do the test of the design and see if there are any changes, do a walkthrough, which is mandatory, which is compulsory, document all of this. So this is something I think is definitely a must do for us when it comes to audit of ICO.
Okay. So basically documentation is very, very key. The file should demonstrate it. So
I think, see, one underlying, as Atulji very much stressed upon, is that it is, and I also said in my talk, that it is an ongoing process.
Yeah.
And it keeps on evolving. It keeps on changing. So the management also has to be on their toes to keep those RCMs and everything up to date. And similarly, the auditor should not just go by, rule forward and take their earlier file and just start doing it. They have to start afresh as far as ICOFAR goes. So because many things would have changed.
Yeah. Okay. Yeah. Thank you so much, Rakesh ji, for your thoughts. So I think this brings us to the end of today's panel discussion on the audit of internal controls for financial reporting. I think it was pleasure to have a discussion with all the eminent panelists, wherein we tried and touched upon the important consideration which an auditor should keep in mind while carrying out the audit or while opining on the ICO file. So I think thank you so much for each of to each of the panelists for taking this time out and having this insightful discussion on the very relevant topic of internal controls.
On behalf of CA Durgesh Kabra sir, I would like to thank you, CA Atul Gupta sir, CA Rakesh Rathi sir, and CA Vinay sir, and our moderator, CA Shraddha ma'am, for moderating the session so wonderfully. Thank you all.
Thank you, madam.
Thank you all.
Thank you.